Good evening, everyone. It is October 8th, 2023, and futures are trading here. Ignore that. Futures are trading here around 43.10, a large price gap down. We're still trading inside yesterday's massive short squeeze range. Let me get rid of all those indicators and all that. Yesterday we had this really huge move. This was, I think, the NFP data that came out gave us this gigantic sell. This what is that, 95 to 47 to 50 point sell. We were unable to take out that overnight low during the RTH. Instead, we churned around here in this kind of whatever this is, 20, 30 point range during that opening range and initial balance. And instead of taking out the initial balance lows or the opening range lows or the overnight lows, we instead accepted above all of those auctions, took out the overnight high over there at 11:30 going into the euro close, and just got continuation upwards. And on a 30-minute chart, this looked hilarious. Just green, 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 green. And I was glad I took that day off. Now, we have had this gap down due to the news in Israel, I believe. I'm not up to date with what is occurring. I know there's been some sort of attack or bombing or a bunch of deaths or whatever. And that's not great. We have had a large gap down now with a 30-point gap down and unable to trade above that opening price run 45 43.50 and sorry, same thing on the Nasdaq. We are unable to trade above the open, sitting at right at that overnight high, right there, 15,040. So unable to get any movement above the open, and until we do, I would not be looking to take this long. And in fact, if during the RTH for tomorrow, this is a weekly video, but I think this is important to take note of. If we do not open, if we do not take out this overnight high, if we cannot get above the open on the Nasdaq or the ES, instead, if we take out the overnight low, I would be very careful in trading to the long side this entire week, to be quite honest. That would be quite bad. Let's get into the bigger charts for a second here. Now, Friday had that enormous short squeeze, like I mentioned. Sellers on the Nasdaq, in my opinion, need to keep us below this area over here. If they get above that first point of supply, I think we'll start ripping upwards. Same thing on the S&P. I think we have to keep under this kind of 435-ish number. Otherwise, we'll come up to this 444 area. Same idea, that first primary point of supply, preliminary supply, whatever you want to call it, and we'll start squeezing upwards as well. So we have, it's a little bit more of a bearish scenario on the SPY, which has been the case for weeks now. This is the first time we're actually getting some high volume buying occurring on the S&P, whereas on the Nasdaq, we've had some decent high volume sessions on the long side. And some actually lower volume sessions on the short side. So the tech being decently bid. As far as where I'd like to see a retracement, if we do get one, I don't really want to see us get into kind of the middle of this range over here. If we just take a half back here, right around 358, that's roughly the monthly open, the prior month's close, the weekly point of control, the weekly VWAP close, all that sort of stuff is clustered around 358. I could even pull that up if you guys wanted to see. It's all this junk here, all this stuff right here. Monthly open, last month's close, weekly point of control, weekly VWAP close. All that stuff is kind of crammed into the 358s here. So if we lose that, I think that'll be a sign of a failure to break out, and I wouldn't look for this zone to hold. Instead, I'd look for us to take out that not last Wednesday, but the week before that's low during that large sell-off session. S&P, same idea. I wouldn't really want to see us getting back below this Monday low, getting back below these lows over these highs of day. I think, again, it'd be a sign of a failed breakout, and you'd be looking to take out all of these lows of the day, all of that Tuesday, Wednesday, Thursday, Friday. Everyone here, in my opinion, has their stops below that Tuesday session. Interestingly enough, we were unable to tag yearly VWAP on, I think, even on the SPX, but on the SPY and ES, we were not able to hit it, so that is of interest. News-wise, I have highlighted Israel. This is going to be the theme of the week, if you ask me. Monday, Columbus Day, I believe the bond market is closed. The stock market is open. We're going to have. I don't think I'm going to trade tomorrow, and I'll actually know within the first 30 or 60 minutes, I think. It's Columbus Day, low volume, bonds aren't open. You have a thinner market with a lot of news coming in. To me, that's kind of a recipe for for moves that just may be very violent and erratic, in my opinion. Tuesday, FOMC's Waller talking a bit in the afternoon. Wednesday, quite a bit of news. PPI, Waller, and FOMC minutes. So I'd imagine it gets quiet around after that Euro close. So after 12 o'clock, I'd look for kind of churn in the day's range. Thursday, CPI. That's obviously a big one. Friday, just Harker and University of Michigan. I think that's consumer sentiment. So overall, coming into this week, it kind of all hinges on what we do during this Sunday overnight, in my opinion. So far, not really. I don't think anyone really knows which way to push this thing. We're just kind of hanging out around the open, below the open, I suppose. Um, I've got no big predictions this week. If we want it, you can also look at the Russell here. Uh, awesome accumulation, markup, distribution, and the markdown coming back to that original, those March lows here, and I think they're pretty much in line with, pretty much in line with those January lows as well. That's what that is right there, that level, 171.9. It's been the critical spot, in my opinion. Uh, this thing just looks very weak. I'd be interested to know what the COT positioning is. That's something I've been getting more and more interested in. Maybe I'll look it up. If it's insanely short, I wouldn't be surprised if we get some sort of squeeze occurring after once again holding these lows. We've been holding these lows since honestly since October of last year. It's been almost a full year. It's October now. It's October 10th. Uh, coming on almost a 1 year anniversary of the low of that bear market. Almost a perfect 1 year. So I have no major bias coming into this week. The small caps look sold. The S&P looks meh. The Nasdaq looks pretty bullish. I'm going to be taking this one day by day. I have no bias. If this Israel stuff gets resolved in a way that's productive for the that's not productive for the oil markets and stuff like that, maybe we got to push up in the indices. But I doubt that's the case. Usually, this kind of conflict will do the opposite. We'll get a rally in crude and stuff like that. I'm sure there's there you go, gap up in the futures market on crude oil. So maybe we go down. I'm not sure. Anyway, hope this was of some sort of help. A lot of rambling with not much info. I don't really see any sort of clear direction. Last week and the week before, I was much more biased and opinionated. But this week, I think it's a good week to take it day by day. See where we go. Can we get back in this sort of balance here? Can we reclaim these lows here? I don't know. So far, we've struggled with that. Maybe we do. Can the Nasdaq hold this sort of range on any sort of back test and continue up into here, into this sort of level? I don't know. Maybe. Hope that's of some help. Hope it gets your brain churning a little bit. But that's all I got. Have a great night. Trade safe if you're trading these crazy gap ups and gap downs and this and that. See you guys later.